Hello and welcome to another edition of Market in Waves on this Wednesday, the 7th of July. So we're just looking at oil and gold today. Oil quite significantly as it's dropped from a 7-year high yesterday, dropping over $30. So it had a bit of a day to forget. And the markets had been poised for the OPEC group to announce that it was going to be bringing output levels back down to pre-pandemic levels. However, the United Arab Emirates kind of put paid to this gradual rise in crude after they stood against an extension of production curbs until the end of 2022. So it's quite a significant piece of information that we received yesterday, and they're basically planning to raise investment and oil capacity once more. So we had quite a big move in oil yesterday. So after finishing the internal structure of the minuet 1, 2, 3, 4, 5, we were looking at the minute structure as well, 1, 2, 3, 4, 5, but as a multi-structural move to the upside. But now that wave 4 has entered wave 1 by the looks of it here, we're looking I'm looking at it now as possible ending diagonal, and then we're just waiting for wave 5 now to start moving higher, possibly at the 100% of the Fibonacci extension level here, which would be a good sign. So I am waiting for oil to bounce back. However, if we do start sliding lower, then this would be invalidated altogether. So let's just take a quick look on what the signals are that are coming out. Well, it's kind of clear that we're having quite a divergence there and there on the MACD and RSI. So I'll just be looking to see how big these bullish divergences are going to be in the next probably 24 hours or so. And then we'll see how much of a move to the upside we can get after the big move yesterday. So falling over $30, quite a sharp descent at least. With gold as well, I'm just bring it so it's a little bit easier to see. So we're basically looking to see if this was going to be a false break or not, because with commodities especially, we can see small spikes in impulses, and then this can remain intact. So it looks like it was a bit of a false break here. Just a touch, but now we've moved up quite sharply and we've actually broken the upper channel, so this is quite a significant move as well. So we've completed the minor wave 4 of Y, and now we are moving higher in the near term at least. So I expect probably a slight correction here and then probably another move up to complete this minor wave 5. Roughly it could probably go above the 1913 level at least. So we'll just wait and see what happens with that, and this could all be invalidated at the moment. My wave Z could have ended down here, and if that's the case, then we'll see if prices do start falling down lower below this 100% Fibonacci retracement. If it does, then that's below the 1675, which is quite significant as well, and that will lead to probably a possible triple zigzag to extend these prices lower. But in the near term, we'll see what is happening with that. Looking at divergences as well, let's just clear the screen for you so it's a little bit easier to comprehend. Not too much in the way of divergences at the moment, so just waiting for further signals to get us up to this minor wave 5 completion, and we'll see what happens in the next few trading sessions. So something to keep an eye on, especially for commodities. Very big moves in the last few trading sessions. Gold going above the 1800 handle, which is quite significant as well. And will it hold there? That is, it's just hovering at the moment around that area. So if it does hold, that'll be quite significant for another push to the upside. Obviously a small correction at first, and then another move higher. So that's all from Marketing Waves today. Thank you very much for joining me. As usual, any comments you'd like to leave on the posts, any of your own scenarios as well, very much welcome to be discussed, and we'll speak again tomorrow. Bye for now.